So welcome to this second quarter earnings call for Boule Diagnostics. Thank you for joining us here in the middle of the summer. Today we're a bit spread out, so I hope technology will be with us today. Myself, I am in Los Angeles. Together with a number of colleagues, I will attend one of the bigger IVD conferences, AACC, this week. And we'll meet a number of customers, particularly OEM customers, and also distributors from South America. So let's start with the highlights of this quarter. We released a new 5-part veterinary instrument, so we now have a broader veterinary portfolio for the European market. And that we're really, really happy to see, and we are now shipping these units to customers in Europe. In the US, on our system side, we had a hospital chain which have been using Boule instruments for many years that decided to upgrade their entire installed base. And that's not so common for us in the US, so that was a very strategic and a complement both to our solutions, but also to our organization. Overall, it's been a tough quarter that we have seen a lot of sales headwinds, due to the geopolitical situation. Of course, our sales in East Europe declined, but we also seen some challenges not to get the orders, but to deliver due to payment restrictions in foreign currencies in some of the markets. For us, we had some bigger orders to Egypt, Iraq, and Pakistan that was moved out of the quarter very late since they could not pay in US dollars. We're very happy to see that our gross margins improved versus last year, despite that we really had an unfavorable product mix in this quarter. And that pressured our gross margin a little bit, compared to the first quarter, but it was a significant improvement versus last year. And when it comes to our new platform development, we're in a very interesting and intense phase. We have done extensive clinical testing, and we also have done many design reviews, also using external resources to make sure we get the best performance. We have identified a number of improvements which we are now implementing, and given that, we have also delayed the start of our validation, which will mean that we actually delay the regulatory submission to the summer of 2024 instead of end of this year. So let's look at the financials. So our growth was 0%, so we're right in million SEK. We ended up at the same level as last year. However, if you consider the currency effect, it's actually a decline of 10% organically. Our gross margins improved by almost 5 percentage points, and also we increased our EBIT by 2.6 percentage points. We have invested 18 million in the new product platform, but we've also done some investments in our facilities and infrastructure, in particular in increasing our capacity and some business continuity investments for our US facility. I think it's worth mentioning here also that I'm not really satisfied with our operating cash flow. It's a significant improvement from last year, but we still continue to run with some high inventory levels. Despite that, we have seen now that this component supplies is much more stable, and we are now having actions so that we kind of trim down our inventory, since we don't see the same need to carry so much inventory internally. Also in the quarter, we increased our receivables. We did the investments, beyond product platform, and we would also amortize the loan. We now have ongoing activities to reduce our working capital, so I expect that we will release capital during the second half of this year. So if you look now, where did we grow? So we had growth in the US and Asia, particularly. In US, this was driven by a continued growth of our OEM consumable sales. Asia was the biggest growth this quarter. And that was a large portion of 5-part instruments in a market where the market prices is lower, so that pressured our gross margin. As expected, we continue to see a decline of our sales in Eastern Europe due to the war in Ukraine. And in South America, it's been a soft quarter, in particular our 3-part instruments that has declined. And we start to see some improvements in Western Europe, and I expect that West Europe will grow going forward, thanks to our extended veterinary portfolio. In the Africa and Middle East, we saw a decline, but it was not really what we planned for. We really expected that we would get some prepayments, and we would ship orders in the third quarter. In the second quarter, that would have actually eliminated this decline in sales that we saw now. So there's just a few bigger orders that was pushed out that caused the decline in Africa and Middle East. So if you look at our how gross profit and EBIT developed, so the gross margin improvements were really thanks to the price increases we implemented last year, but also that we not buying components on the spot market, so we have reduced our purchase cost. But I would also like to point out that we also made significant improvements when it comes to efficiency in the instrument production. I would really like to thank our production team for the progress been made here during the spring. Others which sticks out here is actually the currency effects. So our EBIT margin is at 6.2%, which is better than last year, but of course not where we should be. But I think we have a number of improvements that will help us improve this significantly the coming year. If we zoom out and look at the bigger picture and see how things have developed over the last 2 years, here you can see the blue bars here are the number of instruments delivered per quarter. And this quarter we delivered 999 instruments. It is less than a year ago, but it's up compared to the second half of last year. What we see here is that we hear from both our OEM consumables customers, but also from distributors, that with increased interest rates and financial costs, many of our partners are trimming their inventories now to lower their need for capital. The red line here is our rolling 12 months consumable sales, and as you can see, it's almost flat with decline, and would have the orders we planned for in the end of June kicked in, we would have seen a small increase instead, but that did not happen. So let's see how things develop in the market. Our OEM consumable sales continue to show a solid growth, even if it has slowed down the last few quarters compared to earlier. And part of that is that our customers are trimming their inventories. They want to reduce their need for working capital. So we're very happy with the development of our current customer relations. But we're also growing a pipeline of smaller projects, which will, create new potential OEM deals in the future. This is a very nice business because very often we are involved in the development of their products during a few years. And once those products are launched, we deliver consumables, through the lifetime of those instruments. And typically these business relationships, last for 10 to 20 years. And the last few contracts we've signed, they are 10-year supply agreements. So a business that we're very happy to have and that we are investing to continue to grow going forward. So looking at the market, there is an underlying growth and need for diagnostics in general. But we really have some headwind when it comes to sales, very much due to the geopolitical and economical situation around the world, particularly then in Eastern Europe, but also in the Middle East and Africa and Asia. There are some weak local currencies that reduce the opportunity to invest short term. But we see there is a growing need in those countries as well. Same time, we see that our bigger customers are trimming their inventories. And what we've seen here lately is that there are delay in payments when it comes to foreign currencies, and that has impacted our deliveries in the second quarter. In the US, we have a positive view of the business. We expect that the OEM business will continue to grow. In Asia, we have a number of initiatives to grow in India, where local manufacturing of reagents is extremely important. We signed an agreement with our partner Q-Line Biotech last year, and we're now in the final phases of setting up manufacturing in India, local. We expect that the first customer deliveries will happen in end of September. And this is very important since many of the future public tenders require make in India to win those tenders. So very happy about the development in that respect for India. In Western Europe, we're really looking forward to see how this new extended vet portfolio can grow our business. And as I've also pointed out the last few quarters, is that we have also are developing a relationship with Fujifilm. They are our distributor for these new vet products in Europe. And I see that will help us create a greater footprint than we have today in Europe. So I expect that veterinary medicine and Europe will grow going forward. In Eastern Europe, I mean, there's no end of the war in Ukraine in sight, and we expect that we further declines and that business will wind down. In Middle East and Africa, I mean, those are interesting markets with a lot of new opportunities. However, our biggest market currently is Egypt, and that market has slowed down due to this payment restrictions. And let's see how that the political situation in that part of the world and also the relationship with Sweden will develop now. But it's clear that there are markets where we have opportunities, even though that our main focus will be to drive sales in North America and West Europe. So one of the biggest highlights of this quarter was that we launched this new 5-part hematology solution called H50V. It's now launched in Europe. It's equipped with 13 predefined animal profiles, and we analyze over 30 parameters within 1 minute. What is unique is that we have the built-in mixer that is very much liked by our customers of our present 4-part instruments. That is now built in also to this instrument, and that's a very smart and very liked feature as it saves bench space. So it feels really good that we now have a very attractive and broader veterinary portfolio going forward. Of course, the big development for Boule and what's important long term, and particularly since the market is shifting from 3-part to 5-part, is to have a fully connected advanced 5-part system with the autoloader and also ability to measure retics, so immature blood cells. We're developing this new product platform and implementing a number of new technologies where we digitize the measurement system. We have now been in the phase where we've been able to test it clinically with several instruments, and we discovered some improvements were both needed and possible. So we are now implementing these improvements, and the instruments will be ready in August, and after that we'll start the clinical validation. At the same time, we're also preparing pre-series production, and so it's a lot of activities and very exciting. But it means that our regulatory submission will be delayed until next summer. So, in summary, a tough quarter, but also a lot of progress. Our business in the US is growing. We have extended our veterinary product portfolio. This is an area where I think there's a lot of potential. We continue to make progress with our new product platform. And we also, the efficiency savings program that we launched some 6 months ago is giving results and really helping us to combat both improving our profits, but also mastering some of this market dynamics, which is very volatile, where we have to be both quick and adapt to new market conditions. So with that, I would like to thank you for your attention and open up for questions.